2024 taught us one thing: the financial landscape moves quickly. And if you're not prepared, you will get left behind. All right, with 2025 here, it's the perfect time to reset, refocus, and build your game plan to make this the most profitable year yet. Whether it's navigating high interest rates, capitalizing on market trends, or diversifying your portfolio like a pro, the right strategies can make all the difference. In this video, I'm gonna break down the key lessons from 2024 and show how to turn them into actionable steps for 2025. So if you're ready to take control of your financial future, smash that like because this video is for you. Your financial game plan for 2025 boils down to 3 critical priorities: navigating high interest rates, focusing on long-term growth, and maintaining a cash reserve. These are your practical strategies to keep you ahead this year. So let's break it down. Number 1, tackle high interest rates. With high rates likely sticking around, it's time to adjust your playbook. Safer investments like ETFs shine in these conditions, offering stable returns while minimizing risk. But if rates drop later in the year, it could open a prime opportunity to re-enter the stock market. How? By using dollar cost averaging. This strategy spreads your investments over time, shielding you from market swings and ensures you're consistently building your portfolio. So number 2, commit to long-term growth. Forget chasing quick wins or risky fads. This year is all about playing the long game. Think of your investments like planting seeds and you're nurturing them for the future growth, not harvesting them early. Stick to proven strategies like diversified index funds, which balance risk and reward over time. Remember, wealth isn't built overnight. It grows through steady, disciplined choices. And number 3, fortify your cash reserve. What does that mean? A solid cash buffer, it isn't just about emergencies. It's your ticket to seize opportunities. Whether it's grabbing undervalued stocks, funding a new venture, or tackling unexpected expenses, having liquidity gives you an upper hand. Aim for at least 3 to 6 months of living expenses, but more if you're in a volatile industry. Flexibility equals power and peace of mind. So what's driving 2025? Well, let's break down the key forces shaping the financial landscape in 2025 and how you can turn them into opportunities. First off, high interest rates. Interest rates are still holding steady, making bonds and other fixed income investments more appealing for those closer to retirement. Stocks, on the other hand, could feel the pinch. But here's your play. If rates start to ease and go down, that's your signal to gradually shift back into equities using dollar cost averaging to manage risk. Number 2, post-election market shifts. 2024's election buzz may have spurred market optimism. Historically, the S&P gains an average of 16.3% the year before an election and 6.7% during the election year itself. But what happens after? Well, 2025 will reveal how the markets adjust to a new political climate. So stay on top and prepared as economic policies take shape this year. Number 3, retirement contribution increases. Here's some good news. The 401k contribution limit is now at $23,500. So that's an extra $500 a year. That might seem small, but over 40 years with a modest growth rate, that's about $140,000 in savings. Yeah, you heard that right. So if you can, max out those contributions. It's a simple yet powerful way to grow wealth while reducing your taxable income. And 2025 may feel unpredictable, but armed with a strategic mindset and these key insights, you'll be ready to navigate challenges and capitalize on opportunities. Financial success this year starts with preparation. So, what's your 2025 asset allocation strategy? This year, I'm sharpening my investment focus around a core belief: Bitcoin! I believe Bitcoin is the cornerstone of financial freedom. And while traditional markets like stocks and ETFs, they promise short-term gains, they can distract from the bigger picture. In 2025, my strategy emphasizes Bitcoin as a long-term store of value and a hedge against the vulnerabilities of traditional financial systems. Why? Well, central banks are tightening their grip. Inflation remains a persistent concern, and market uncertainties, it's still here. Bitcoin offers something no stock or ETF can: freedom from middlemen, unmatched transparency, and a truly decentralized financial framework. See, it's digital gold for the modern era. And that said, diversification remains essential. My portfolio, it's not exclusively Bitcoin, but it's pretty heavy this year. It's complemented by cash reserves for flexibility and opportunities. Real estate, my business, and other classes. This balanced approach ensures I can navigate both highs and lows of the market without stress. And speaking of stress, here's a game-changing insight I picked up from Morgan Housel during his Diary of a CEO podcast appearance. The less you micromanage your portfolio, the better. Have you ever heard set it and forget it? Okay, don't micromanage it. Refreshing your account daily, it's a mental trap that does more harm than good. Instead, focus on the long game. Consistently investing over 10, 20, 30 years, it can deliver returns that outperform even the most aggressive short-term strategies of trying to time everything. So whether your portfolio leaves heavily on Bitcoin or takes a different approach, just remember, patience and conviction, they are your greatest allies. And the one thing that remains true this year, 2025, is about building the future, one steady step at a time. So let's build on this foundation and explore how a diversified approach can set the stage for steady, long-term growth in 2025. Number one, the importance of holding cash. Let's talk cash reserves, because they're not just a safety net like most people believe. They're an opportunity creator. See, in 2024, I kept about 25-30% of my portfolio in cash. And while I've invested heavily for the crypto bull run, here's why keeping cash on hand can be critical for growth. When markets tank, as they did during COVID-19 or 2008, having cash on hand lets you scoop up stocks at a bargain price. Nassim Taleb, a financial expert I follow, puts it perfectly. Invest in preparedness, not in prediction. You hear that? Prepared, not predicting. We can't predict the next market crash, but we can be ready for it. So think about it. If the market takes a nosedive, your cash becomes your ticket to buying quality assets at a discounted price. That's how you turn short-term pain into long-term gains. But cash isn't the only tool in your arsenal. Managing taxes strategically can also be a game changer for maximizing returns. So number two, tax loss harvesting, but don't overdo it. Another strategy I'm keeping in my 2025 playbook is tax loss harvesting. It's simple. Sell off underperforming investments to offset the taxes you may have on your gains. But, and this is crucial, you've got to be careful, because overusing this strategy can screw up everything you have on your plan. Here's an example. If I sell a losing stock for tax benefits, I need to be sure I'm not just chasing a quick tax break. The goal is to stay true to my overall strategy, not let short-term moves derail long-term goals. Do you see the balance here? Use tax loss harvesting sparingly and wisely. It's a tool and it's not a crutch, but it does work. Okay, number three, managing risk through diversification. Diversification is still king when it comes to risk management. And for 2025, my focus remains on spreading investments across different assets with a heavy emphasis on Bitcoin right now as my cornerstone. While traditional diversification uses index funds and ETFs to balance sectors and regions, I'm refining my approach to include alternative assets like crypto. Markets are unpredictable, but diversification provides resilience. Whether it's navigating economic uncertainties or market volatility, a balanced portfolio ensures you're prepared for whatever this year throws your way. So number four, sustainable investing. Sustainable investing is no longer just a buzzword. It's shaping the future of finance. Puts the spotlight on companies that prioritize sustainability and ethical practices. While I've been cautious about chasing trends, the momentum behind ESG suggests it's more than a passing phase. As global priorities shift towards environmental and social responsibility, this sector is expected to see significant growth. That said, ESG investments aren't without risks, okay? There's regulatory changes or evolving consumer preferences that could impact the performance of companies in this space. But on the flip side, they offer unique opportunities for both long-term growth and positive social impact. Personally, I'm planning to allocate a small portion of my portfolio to ESG-focused funds in 2025. In fact, I'm very well diversified in that sector, making sure that they align with my overall goals. So the idea is to balance optimism with careful evaluation, because sustainable investing isn't just about doing good. It's about making smart financial choices as well. So number five, global economic factors to watch. 2025 won't be all about domestic markets, okay? Global economic shifts will play a massive role in shaping investment opportunities. One major area to watch is the ongoing economic recovery from the pandemic. See, inflation, supply chain disruptions, and lingering fallout from previous crises, they're still creating challenges, but they also open doors for savvy investors. See, China's economic trajectory is especially crucial. While the country faces hurdles like slowing growth and policy constraints, its massive market continues to hold significant potential. Tech and manufacturing sectors in particular offer opportunities if approached strategically. On the flip side, Europe is navigating its own challenges. The European Central Bank is tackling inflation, but growth in the region remains uncertain. So this creates a mixed bag of risks and opportunities, especially in emerging markets, where higher growth potential often comes with more volatility. So for me, keeping an eye on these regions and sectors, it's going to be essential, but global markets are interconnected. And understanding these dynamics can uncover undervalued opportunities that are ready for long-term investments. And number 6, I've said it once, I've said it twice, I'm going to say it 1,000 times, cryptocurrency, baby. And as a side note, if you haven't gotten my, as of right now, completely free crypto and money mastermind, the link's below, get on it, because not all crypto is made the same. Not all crypto is safe. And you, my friend, you don't have to get screwed over. All right, so grab the link, become an empowered investor and not a gambler. Grab that course, it's down below. It's no secret that crypto remains volatile, but its potential as a long-term investment, it just can't be ignored. In 2025, I'm maintaining a focused approach with Bitcoin and Ethereum and a few other altcoins. And these assets offer the potential for outsized returns while serving as a hedge against traditional markets. With growing adoption, regulatory clarity on the horizon, it's coming, guys. Crypto's role as a foundational investment, it's strengthening. And number 7, real estate. See, in 2026, and yes, I know I said 2026 because I'm planning to double down on this asset class, focusing on properties that generate passive income from gains I have made through crypto in 2025. Why? Because rental demand is still on the rise, even though home prices have cooled off a bit compared to the pandemic boom. And for anyone looking to diversify your portfolio, real estate is a solid choice. It offers the dual benefits of capital appreciation and steady cash flow, especially with income generating assets like multifamily properties. But here's the thing, real estate isn't just about owning property. You might want to look into real estate investment trusts or REITs. I personally am invested through some private syndications along those lines. These beauties let you invest in real estate indirectly, providing liquidity and diversification without the need to buy physical property. REITs can give you exposure to commercial or residential properties while saving you the hassle of property management. Okay? It's like having a slice of the real estate pie without baking the whole fucking thing yourself. And so whether you're considering traditional real estate or dipping your toe into a REIT, the key is aligning your strategy with your goal. For me, 2025 is about expanding my portfolio thoughtfully, leveraging the income potential of real estate to create more financial stability, building a strong investment portfolio. Ultimately, the goal is simple. Build a portfolio that can ride out market fluctuations while steadily growing over time. And in 2025, I'm keeping my focus on finding the right balance between risk and reward. The lesson I keep coming back to, stick to your plan, even when the market feels unpredictable. It's not about reacting to every little bump. It's about patience, consistency, and keeping your eyes on the long-term prize. Markets will always have their ups and downs. That's just how it works. But if you stay updated, adapt to economic changes, and stick to a clear strategy, you'll set yourself up for steady, sustainable growth. That's the plan for 2025, and I'm optimistic it'll help us continue building wealth in a smart, calculated way. Now, if you found this video helpful, please give it a thumbs up and subscribe. It helps more than you will ever imagine to the algorithms and reaching more people. So as always, thank you for coming on this journey with me. You, my friend, you made it to the end. So give yourself a fist bump, booyah, from me to you, and you keep living your life to the fullest, while I will see you on another video, maybe right here, or just go click another. You keep living your life, baby. Peace.